Welcome to Insights. I'm Eric. Thanks for joining us this morning. We're going to talk about sentiment. Sentiment has been a conversation on the table for years here at Insights. We've talked about it probably a little bit differently than it gets tossed around the internet. I see today where I posted a tweet that I pulled off the internet that suggested that stocks are just preparing to climb the wall of worry. But this setup is much different than that. The wall of worry has a unique footprint. What we're seeing today is more like it's more like sentiment is rolling down the hill of comfort rather than climbing the wall of worry. And we're going to talk about what that means for stocks in general. In terms of the way we look at sentiment, we look at sentiment in terms of direction and concentration. We study the American Association of Individual Investors sentiment reading. It goes back into about 1990 or late 80s, I believe. We can see here that this is one aspect of direction. This is up or down the oscillator. This is the LTSO. This is found inside the matrix. I forgot which line it is. It's in the Trends tab. We've talked about it before. When it's above the zero line and we have green, we have a bullish phase of sentiment. When it's below the zero line, it's bearish. And you can see that in general, when the market's rallying, you have a lot of green boxes. But the market can rally during bearish phases or the lack of shading. But in general, you see that the market goes into consolidation or goes into declines. With the exception of right here, it generally moves downward in this shape or fashion. This is weekly data, or it struggles to rally when a bear phase is in place, and we'll have to keep that in mind. We'll take a closer look at here through 2015. We can see that this sentiment phase turned down. We talked about this already. Stocks have continued to rally within that, but it's a warning in itself. Bear phases in sentiment, unless they're aborted by the actions of, say, interim injections from the Federal Reserve or something that kind of bails out the system. In general, bear phases tend to be associated with declines in the stock market, and they are warnings that people are getting a bit nervous. So the fact that we're in a bear phase right now suggests that we're kind of swimming against the current, so to speak. There are other measures that we use to time a bear market correction, and it's really a breath of a message. We just can't use sentiment alone. Sentiment in itself, in terms of the sentiment directional indicator, is not a super reliable tool, but it does give you an idea of what investors are thinking in the moment. Now, when it comes to describing the backdrop of bullish and bear sentiment and stocks climbing the wall of worry, we're talking here, we use the weighted average sentiment. This is concentration. And I pulled out a comment that said, well, stocks are climbing a wall of worry. But I want to point out that stocks, and really refute that comment, that stocks generally climb the wall of worry from when you're from a position of extreme pessimism. So we're down here. Stocks tend to fall down, they tend to crash, sentiment's very low. And then as the stock market rallies, it pulls up sentiment from extreme pessimism to optimism. In a sense, it climbs the wall of worry as the stock market rallies. And you can see this over and over, from here to here, from here to here. Stocks rally, it's pulling sentiment. The time to pull, to climb the wall of worry was down here, right around here. If we pull out these bullish cups, which are marked in the green, you can see that these periods, or the white highlighted, represent extreme pessimism. And then after that, stocks climb the wall of worry until a bearish formation comes, and then we have extreme optimism. So the fact that people are suggesting that stocks are climbing a wall of worry after we reach an extreme optimism is not correct. We're actually in a different type of setup now. If you want to describe it in terms of trading heuristics, this would be maybe stocks are rolling down the hill of comfort instead of climbing the wall of worry. It doesn't necessarily mean the stock market's going to crash, but it is not the same as stocks being pulled, investors being pessimistic and pulled in the opposite direction. This is the cycle from down to up, down to up. This one's going to be up to down. And up to down, and I've marked some of these with these boxes, generally mark consolidation periods where if you're lucky, the stock market doesn't crash. If you're unlucky, the market does crash and it comes down. It really depends on what the economic conditions are and what else is taking place within the sentiment concentration. But really, the suggestion that the stock market is okay because it's really climbing the wall of worry as sentiment, and I think what they're suggesting is that shorter term, if you look at things like bullish and bearish sentiment, the number of bulls is dropping rapidly. Well, that's a shorter term, a snapshot. But the longer term, yes, we're being pulled down, but we're being pulled down from a peak rather than being pulled up from a nadir or from a low. And that is completely different. And I just want to clarify that this is not a stock market climbing the wall of worry. We're in an opposite position, and the outcomes are far less definitive than when stocks climb the wall of worry. People who've traded a while and invested a while know that stocks and that the backdrop of climbing the wall of worry, when we go from the low to high, the low to high, it's if you're not in, you're worrying. But you generally, it's because the stock market is rallying. It's one of the most well-defined setups within the sentiment universe. But when we get into a peak situation like this and we start rolling down the hill, the outcomes are far less definitive than a rally. It's less likely to see a rally. It's also possible we could see consolidation. But within the mix, we could also see a decline or a significant economic contraction as well. The fact that we had just seen one of the highest economic peaks or sentiment optimistic peaks since, I don't know, what is that, about 2010. We saw some here. We saw a large one back in 2021. This is a really big peak, and the fact that the market's not going to pause here or consolidate or grind or even do something worse, that's an unrealistic expectation. That's why I think if you're associating this with climbing the wall of worry, you are painting the wrong picture of the backdrop of sentiment. Sentiment is a function of direction and concentration. I think people are studying some of the concentration, but this concentration is shorter term. This is the weighted average sentiment. This is longer term. We use this. If you look at stuff really short term, like, here, you're going to say, well, yeah, it's dropping, but it's dropping within the context of a broader trend, and that trend and broader cycle, and that cycle is down. It's down from a high. This is sentiment rolling down the hill of comfort. This is just not the same as climbing the wall of worry. I don't want you to get fooled by that when you see that on the internet. This is a different sentiment backdrop. It's going to be the chances are it's going to be far less favorable to stock rally. Now, we could rally because stocks can be seen as a safe haven during a time of a crisis. That's a real possibility considering what the backdrop is, but that's not going to happen because stocks are climbing a wall of worry based on economic conditions. That's going to happen because of flight of capital, and that's a different backdrop. You could still see the stock market spike and rally into a major crisis or panic. But for that to happen, all other assets have to be taken off of the table, and there has to be a real safe haven blitz taking place. And that's unusual for stocks to do that, but we are reaching and approaching an unusual point in history. So that's really the sentiment situation. It's a function of direction and concentration, and I don't want you to think it's climbing the wall of worry here. I think those ideas and those concepts are going to be wrong. Wrong in terms of, I guess, whether or not the price goes down or up. If that's all you care about, then maybe you'll miss the point of this whole discussion. This backdrop is completely different, which leaves a different menu of possibilities than a market that's climbing the wall of worry. If you have any questions about what we talked about, let me know. Contact me back at the blog. I'm going to leave this one open. You can also subscribe to this channel when I leave this stuff open. We have some good content up on YouTube periodically. A lot of it's restricted for subscribers back inside. You can follow all these, the weighted average sentiment, the directional, the LSTO right here. All this stuff is available inside the matrix, and I have everyone track them, and we talk about them pretty regularly. So if you have any other questions, let us know. If not, thanks for watching, and we'll talk to you guys later.